for change first. Oh, instead of being neutral, I should be starting soon. Tools. Ooh, gotta turn my phone off. Advancing switcher. Stop. Close. Starting soon. All right. We're streaming right now. Can she check the page, please? Can you hear me? Well, we both have to speak, so you speak and then I'll speak. And let me actually turn on the music so she can hear. She says she can hear us. Can you talk, Tom? She hears Peter very clearly. You keep talking, Tom. Keep talking. Just remember, everybody can hear you. Everybody can hear you. Okay, cool. I just didn't know. I was worried that you thought only you. She doesn't hear Tom at all. All right. Yeah, I put it back on the main screen, and she should hear. No. That's not what I mean. Don't worry about it. Hang on. Let me turn up your audio here. All right, keep talking though. Takes about a minute or two. She might hear you in a second. Let me check myself. All right. You're not being heard because. All right, let's put up the. I'm trying to remember what we did last time. God damn it. Let's see. All right, folks, give us a second here. I'm gonna get started. We've got some cool stuff coming up for you here today. Audio is on. Audio property, events audio, monitor on. All right, chat, Tom. If you don't talk, we can't test this. Really? You're monitoring the audio? Okay, let me. I don't understand. Yeah, the glare is just a slide. I got to deal with it in the future. I can't deal with it now.
You talking still?
If I put you full screen, they'll hear you, but. If I put you full screen, I'm pretty sure it'll work. So let me test that out.
Yeah. So let's test. Let's see if on full screen I can still be heard.
Right. But did Did you hear yourself? You can. Not at all. Uh, I mean, right now, when you're not full screen, it's being pumped in through the NDI source in the same way. I created a source that was audio only. The thing is, when I turn your
Over in OBS properly. You said that when you created the audio source or label the video on it and just use the audio, something like that, or that when you copied it over to a different scene, you didn't copy it over in the right way.
okay, I think I found a way to do it. So just see if your audio can be heard now.
Okay, this is a test to see. Also, you let me know if you can hear my audio. All right, she's gonna let me know if she can. She hears Tom now.
She hears Tom now,
Yeah.
even though he's small and not full screen.
Yeah, so I'm watching it too, and I could see my captions even when I'm on full screen.
All right. So but now I don't
Yeah,
have the problem that I can't make you I can't make you full screen. I think that's what we
Why?
did last time. I didn't put you full screen because then I have to switch a setting that I don't have like easy access to. I think this is what we did last time. Can you hear me?
Okay, so we'll just do it this way, and I'll record my stuff so when I need to have it for the full video.
Hang on. There's a way for me
Well,
to.
that sucks. I want to be able to go full screen.
There is a way for
What's
me
the
to do
set?
full screen. There is a way for me to do full screen. It's just a little bit of a workaround.
What's the workaround?
I have to go into the setting and change it from audio only to full. If you don't have time, then we can do it that way.
What do you mean? You have to do that every single time you switch to full screen?
Correct.
But why is that making it so that the audio can be heard not full screen?
When I bring in your source, I can choose whether it's video and audio or just audio, but I can't create a second source that's just your audio. So
Why can't you bring in my video and audio as another source and just have me off screen?
Off screen.
Oh, yeah, like in behind the OBS. No, just put me somewhere else. So the video can be the audio.
I can put you behind me. All right, so I put you behind me. We should still hear you. Let's change it back to video.
All right. Talk right through it, and then you'll let me know when the change is done, and then Melissa can let me know if I'm heard.
Okay, give me.
Let's see here.
Okay, the change is done.
Peter's made the change right now, so Peter's going to switch between full screen and not full screen. I'm going to see Peter call it out when it's full screen and not full screen.
It's not full screen right now, and you're
all right.
Talking.
Be heard. And now when we switch back to you just let me know if it can still be heard. Melissa will give me another thumbs up. She hears it in both situations.
All right, let me switch. Okay, now we're full screen. Full screen talk.
All right. Can you, Melissa, you give me a thumbs up. You can hear me on full screen, and then switch me to the not full screen.
I switched you back.
And you're going to see if you can still hear me now. Can you still hear me now?
That should work.
All right.
All right. Good. Let me just add a shortcut here.
She hears Tom on both.
Perfect. Wonderful. She hears Tom on both. Okay, so let me close this off and let me put my camera, let me put my audio in yours so that you can hear me when we switch. And that is going to be a scene.
Perfect.
And it'll be the...
Thank you, wifey. You're doing a great job, Melissa.
Yeah.
You're doing a great job, Melissa.
You're so cool, Melissa. Yeah, isn't she swell?
She's really fantastic. I think she's the best. Why didn't it add the scene in here? Add the scene. Add the scene table. Table shot. Okay. It's not adding it in here. Weird. Let me do a different scene. Camera. ADD. So if I push this down. All right, so we should be good now. Hopefully we got no trouble there. Can you just confirm, Alyssa, if you can hear my voice while Tom is full screen right now? That's all I have to confirm, then we can start. So right now Tom's full screen. Tom talk, I talk. Keep talking, Tom. Say something.
This is me talking,
Perfect.
so she can hear at the same time. We have to make sure that we're hearing in both
And
scenarios.
then switch back to table, and then we're good. All right. And then we should hear you here too. All right, let's do this. She can. Excellent, excellent. So we're good. Let's do it. Hey there, my name is Peter Hartman. You're watching Bad Guru Nightly, and I am Bad Guru. This show is meant to serve as a reminder that your attention matters. You see, what we give our attention to becomes a greater part of our experience. We shape our reality with the power of our attention. So it's important to be deliberate. And I'm so glad you decided to give me some of your attention here tonight. We'll be talking to marketer Tom Hartman about financial literacy, about this mania that's happening with GameStop. And then afterwards, Peter Hartman, me, will have a little word with you, asking you about how was your day and reminding you that love is a choice. Tom, welcome to the show.
Nice to be here. Nice to be here.
Very good to have you.
You gotta move the cursor, apparently.
Oh, yes. Never, ever forget me to remind me to move the cursor, because my goodness, do I hate when the cursor is on the screen. You ever like watching somebody and you're like, just move it out of the way.
Well, I did remind you.
You did remind me. I'm going to have to deal with this light here at some point, but we can't deal with that here today. Tom, how was your day?
Yes, Peter.
How was your day?
Today was an epic day. I love when something completely unexpected happens that doesn't hurt me. that doesn't bother me. It's sort of like a mini chaotic episode. We just have to jump on the stream and talk about it.
Look, I talked to you earlier today. Well, this morning I wake up, I get a text message from Tom, and you write, I got to make sure that I can say what you wrote, because sometimes you write things I can't say. You sent me this image, and it's an image of a chart. I mean, I didn't know what this chart was right now. I mean, I can't really show it to you, but anyway, you can't really see it there. And it's just a line that goes like right up. Do you have that chart on your screen, Tom?
I do have that chart. 1 second. Right here. Right there.
Yeah, that's the chart he sends me this morning. So I wake up, I go, what is this? Is that Bitcoin? What's that? And he says, and he tells me, and that's why you never naked short. The orange bar at the top, that's 50% higher than the previous closing green candle. That was itself an all-time high, is how you end up not having a good time. I'm not going to say exactly what you said. Not having a good time. Having a bad day. Tom, what the heck's a naked short?
A naked short. So everybody knows when you're buying a stock, right? You can just buy the stock. You buy a stock of Apple. You're like, okay, I want one share at $100. If it goes up to 120, you make it $20. That makes sense, right?
Makes sense.
But you can also short a stock. You can also say, I think Apple will go from $100 a share down to $90 a share. So what you do is that you borrow a share from somebody else without them knowing. You sell it on the market for $100. Wait till it goes down to $90. Buy it back. Put the share back without the other person knowing, and keep the $10 difference. So that's called shorting. Works great if the market goes your way.
And this is
so when you naked short, usually you can short a stock if you already have some. Let's say you already have some of that stock, you can short it. So you're basically shorting your own stock. You're trying to make money on the downside without getting rid of your own stock. But if you short without having any Apple shares, well, if Apple goes up to from $100 to $200 a share, you still got to give back that share of Apple. So you got to buy it no matter the price. Doesn't matter if it goes to 1 billion. You gotta buy that Apple share. And what's interesting is if you go long a stock, if you buy a stock, well, that $100 Apple stock can only go down to zero. All you can ever lose is $100. But if you naked short, what between 100 and infinity, you can owe anything. Definitely your home, definitely everything, all the money you've ever earned in your entire life, you can own because if you short it improperly.
Okay, so naked short. It sounds like something illegal that you can't do. Sounds like funny business. You're borrowing something you don't got, and you got to pay it back. It sounds illegal, so that's what happened, right?
There's good things and bad things about it. Sometimes it becomes illegal. Sometimes it's not. It depends what point of history you're in. As you can imagine, when rich people want to make a lot of money, things that were illegal before now becomes legal. And when they lose a lot of money, they go, rah, 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 we got to stop this from happening. But currently it's legal, so you can short. There's good things about it too. So we won't get into that. But
yeah, of course.
Suffice to say, it's not shorting is not a weak person's game. You gotta know what you're doing.
Excellent. You sent me this morning, and then I thought, you know what? I hear a lot about paying attention to the financial markets these days, because what else is there to do? I hear there's a lot of retail investors, a lot of new people jumping in, a lot of people using apps and the technology we have today in order to go trading, people doing well, people losing their shirts. Robinhood, I think, is a word that's thrown around. I think that's an app that you can use, right? Is that
yeah, Robinhood, Wealthsimple, a bunch of these trading apps.
So, I remember when you get in here, you're learning the whole process, and then you get surprised by things, right? You didn't know that this could happen. You didn't know that behavior was working out. It's like, okay, somebody can teach you how to ride a bicycle, but you don't know. They don't tell you, oh, by the way, when you're riding a bicycle and you ride next to cars on the street, they might open their car door and you go flying, right? It's not in the manual for riding a bicycle. It might not be the obvious thing to tell you, but there's these dangers that are out there in the market. I'd like to think of the market as this huge ocean, and there's like sharks and things in there that can eat you, and you don't know. You're swimming there, you got your head above the water, and all of a sudden you feel a little tingle around your leg, and you're like, huh, what's that? Whoa, what? Huh? And then all of a sudden you get pulled down, and you're like, oh my god, I didn't know something like this could happen. Oh my goodness. So I thought, oh my god, there's a bunch of people out there. When it comes to Jumpstart, Jumpstart is a segment we do. It's about helping people who want to start a business or already have a business. And a lot of people are sort of independent contractors doing their own thing. I think it's entrepreneurial to go into the stock market. I don't know if that counts, but they might be in danger. And I thought, okay, there's got to be some basic things that they should know about. This naked squeeze thing is one. I've heard another word. I don't know.
Short squeeze.
Short squeeze. So is it a naked squeeze the same thing as a short squeeze?
No, naked short and a short squeeze.
A naked short and a short squeeze. Okay.
Yeah, a naked short is when I'm shorting something and I don't have those shares. So if things go wrong, I gotta buy the shares of whatever is on the market. That's why it's naked. I'm not covered by my own amount of shares. And a short squeeze is what's going on in GameStop right now, where a bunch of people who were short are now forced by a bunch of people who are long the stock. They're forced to cover their position. They're forced to undo their shorts. They're forced to go into the market and buy the shares and give it back to the people that they borrowed. But when you have a short squeeze, the price can go up so quickly that you can go bankrupt, waiting for an opportunity to buy the stock back.
And often,
so a short squeeze is when a bunch of people squeeze it, and the price goes higher and higher and higher and higher and higher beyond any reasonableness.
I hear that. Correct me if I'm wrong. Again, I'm coming to this from a layman's perspective, so I feel like it's justified for everybody else who might feel the way that I do. I hear that when you short, you can borrow to short. Like there's a kind of borrowing that happens. Is that? Am I mixing that up with something?
Yeah. Well, there's two ways you can short a stock. So we won't go into great detail on both ways, but you've heard of both stocks and options, right?
Yeah.
Yeah, so stocks is just a share of the company, a share of Apple, $100, and you own a share of Apple. The price goes up, it's great. Make a dividend, that's fantastic. But options allow you to purchase a little bit of Apple without actually buying a share. What you're doing is that you're betting on whether you think the price will go up or down in a given period of time. So think of it this way. you can bet on sports, whether a team will win or lose. But you can also bet on the spread by how much do you think the team will win and by how much you think the team will lose. And if you bet on a spread, sometimes you can get way better returns than if you bet solely on will they win or lose. Right? The win or lose is more binary, and the spread is like not only do you got to get whether the winner it won or not, but you have to get by how much. So options in the stock market, not only are you betting if it'll go up or down, you're betting if it'll go up and down by a certain amount in a certain period of time. Now, as you can imagine, in order to make that bet, someone has to give you way better returns. You have to get a way better payout than if you just bought the stock outright. Because if I bought the share of Apple, I could just hold it for the next 20 years and I never have to, if it goes up over 20 years, I can make money. But if I'm buying an option and I'm saying it's going to go up by Friday, then I want to get paid back a lot more. So you can short, if you short with stocks, it's like we were talking about before. You're dealing with your broker. The broker says, look, Peter's got 100 shares of Apple. I'll let you borrow his shares, but one way or another, you got to put them back. And so that's one way. But options, oh my God. You can short in all kinds of different ways with options. And just like you can get great returns if you're right, you can get brutalized if you're wrong. You can owe far more than what you put on, right? So some people short, I'm not going to go through all the details, but basically, if you can lose if $100 stock, $100 Apple share goes up by 50%, goes up to $150. When you're betting it's going to go the other way on a short on the stock, fine, you got to pay $50 more for that share, right? You got to pay $150 out of $100, and now you're out $50 per share. That you can understand. But that same exact move in options, you might owe $100,000 on that $50 move, depending on how you make that bet. You can lose your house on that $50 move on Apple.
Kind of sounds like going into a casino and then you're getting down to the wire, you've lost all your chips, and then somebody comes up to you and says, hey, you can put your house on here and you can play some more.
Oh, worse, all right? So imagine you go to the casino and everyone, if you've been to a casino, you put your money down, fine, I hit on 17 on blackjack, I lost the money I put on the table. But imagine you sit down at the table and you never had to go and give any, put any money into exchange for chips. You just sat on the table and they go, we'll just keep giving you chips. You can just keep betting as long as you want.
Wow.
And at the end, if you win or lose, well, you redeem it afterwards. So you're not keeping track of your bets. And all of a sudden you get up and you go, oh yeah, you owe us your house. It's like, what? Yeah, you've been playing and you put a bet here and now you owe us your house. Like, holy Lord.
All right.
That's the kind of craziness that happens with options.
All right. So options, another thing that's illegal and shouldn't be, and funny business, of course, it's legal. If you get caught doing options, you go to jail.
Options are great. Options are actually better than stocks, in my opinion, because options are insurance policies. If a stock goes down and you expected it to go up, if you had an option, you might be really, really happy. But what happens in any insurance policy, some guy is paying to get insurance and the other guy has to pay out that insurance. So if you buy options, you can buy options all day and you're fine. But if you sell options to make that easy money, you sell the options, well, when the hurricane passes by, you got to pay out. That's the problem. So you never, options are great if you buy them. Never, ever, ever, under any circumstances, sell options.
Tom, I feel like you just saved a lot of people some headache with that one. Have you ever sold an option before? You kind of sound like you speak from experience. All right, we won't get.
Well, I've never sold an option. I never sold an option in such a situation where I ended up losing my shirt, because before I learned about it, I heard all these horror stories and I did my homework. But oh my God, the stories of like some 22-year-old who gets in, they open up the Robinhood account, they we'll give you 10 free trades, and I'm like, great, and they put on their options. They're up this money, they're up this money, they're up this money. Now they're down $50,000. Happens every day. This kid the other day hung himself because he lost so much money with options. He was this 18-year-old kid and he couldn't face the idea that he had to tell his parents that he lost
Can't
all
you
this
just
money.
go bankrupt? Like,
Yeah, when you're 18 and you don't know that, you think,
oh, that's rough.
you know.
That's dark, man. That's exactly why I want to talk about this type of stuff. I mean, not exactly why. You brought up a kind of a dark point there, but it is true that people, could be making some big mistakes. And you see an opportunity. We talked about seizing opportunities. We talked about that. But also, I want people to understand the types of opportunities that they want to engage in, I remember being at a bar, at a club, a decade ago when I used to go out. And I remember this young woman walked up to me, beautiful woman. She started talking to me, flirting with me, and I was like, "Oh wow, I was oh nice." I'm insecure. I don't talk to women, or I didn't at the time. And so she comes up to me, talks to me, like, "Hi, how you doing? You want to buy me a drink?" I bought her a drink, and we sat down at the table. And I was like, "Oh my god, this girl." She's sitting down, talking with me. We're having a fun time. She's clearly into me. I'm flying high.
I think
I'm
I
feeling
know where
good.
this is going.
And then a guy walks over. He's like, "Hey, you know." I need money. And I was like, huh? What? And that's when I realized this girl's a prostitute. She's a sex worker. Nothing wrong with sex working. I didn't know I was engaged in I didn't know somebody's going to come calling, looking for some cash. So, even you go out, you see an opportunity, a nice young lady, you decide to seize upon it. It could be something that's dangerous. And in the stock market, you see an opportunity. Here's an app. I can put some money in here. Here's the options. I can make some quick money. And then it could turn out to not be so great. So I know offline we talked about risk management. And I thought it'd be a very good lesson to learn, especially today, people getting short squeezed with the GameStop. So in this part here, I want to talk about financial literacy. I want to get people just to get a cursory idea. I mean, maybe you've never even heard of these terms before. Okay, so I want to shoot another one by you. We talked about the naked short. Did I get that right? All right,
Right.
cool. Short squeeze. Yep. That's pretty cool. And then so valuation. What does that mean?
Yeah, that's a term that sort of makes economists laugh right now. Valuation before is what should a company be valued at. So if you imagine a textile company, then you go, okay, the valuation of the company, at minimum, they're worth whatever you can sell the factories for, whatever inventories they have, whatever IP that they're holding on to, patterns or anything like that they hold on to. You go, okay, there's at least that. Then you go, how much money is that company making every year for the last 10 years, and you extrapolate that into the future for the next 5 years. You do some basic math, and you calculate, well, this is how much I would pay for this company, and so I divide that by the number of shares that are there, and this should be the share price, depending on if this trend continues, and that makes sense. So that's why you're buying $100 worth of a share of Apple might be $100 because it's pricing in. This is how much Apple will be worth in this period of time. Well, what do you do when a company like Tesla or anything like that is trading the price that you're paying for the share far outpaces the physical assets that they have, the intellectual property that they have, the cash on hand, the money they bring in. Some of these shares are like 10, 20, 30, 100, 1,000 times more than what the valuation than what they're at. But you got to know what to value something at, right? If you're going to buy a share, sure, you're buying a share of a company because you think it'll go up in value. You got to know, well, what is it do I think it'll go to? If you don't even have any idea, then you really shouldn't be buying the share. I'm not saying you need to, do the math yourself, but at least check, reports and get a consensus of people that you respect. Just have some idea of it, because the stock might be, if you bought, let's say, Microsoft at the top of the .com bubble, right? Microsoft is still around now, a very profitable company, but it took you 10 years after the .com crash for the price of Microsoft to get back up to where it was in 2000. So that would have been a bad time to buy it, even though, it was going up for years. So you got to know what valuation is. What should this company be valued at, and what should I be paying for this company?
Sounds like common sense. That's very good. Valuation. I've heard that on CNBC. I've heard James Cramer Mr. Cream, we talk about that. So thank you for explaining that. And lastly here, margin call. Sounds dangerous. I've seen that movie.
Yeah. Yeah. So if you're normally invested in like some sort of a retirement savings account or tax-free savings account, you're not usually dealing with any type of margin, right? What if you put $1,000 in, you're investing $1,000, you're just all you can lose is $1,000. But when you're dealing with a margin account, what that means is that the bank allows you, the broker allows you to have if you have $1,000 in your account, it'll allow you to borrow from them on credit. Let's say 50% more than what you have, 200% more than what you have, 300% more than what you have, right? So $1,000 you might be able to do 3 times that. So that means you're able to buy more shares than you would have normally.
And this is different than the options.
Sort of, but we won't go into all the difference about it.
But this is
sometimes it's the same, sometimes it's...
But this is for stock. So once you're buying shares in a company, just straight up, I'm buying shares. I can buy shares on margin, meaning I get credit for this. That's more like the casino example where I can place a bet by signing my house type of thing, or...
Yes, by putting your house up as collateral, let's say. But in this case, what it really is that the money in your account that you have in your broker account, that's the collateral. Mm-hmm. And if you keep a certain amount, like the broker might say, you have to have at least 10% of your bets you have to have that much cash inside your account. So if you have that in an account, you can bet 1,000% more than what you have over there. And so basically, you're buying shares on credit, right?
Yeah. Okay.
Now, if you're buying the shares on credit and the stock goes up, no problem. You sell your shares, you make some money, and you're happy. You bought more shares than you could have otherwise. But if the stock you buy goes against you, now all of a sudden your account that had a portfolio value of $5,000, now you're down to $4,000, and the bank might say, your $1,000 that you have as margin is not enough. We need you to put another $1,000 in. We need $2,000, right? Now, if you have that extra money to put in, that's what's called a margin call. They're saying, hey, your margin here, we're doing a call. You're gonna have to put more money in. If you put more money in, then no harm, no foul. You just continue with your shares. But if you don't put the money in the appropriate amount of time, then they sell all the shares you bought, and whatever you owe, you got to pay. You got to pay up. You got to cover your margin. You still owe this money to the broker, to the bank.
So. Why is it a margin call? Why isn't it like you just always need this percentage for whatever you're borrowing? Like, why do sometimes they don't do a call? Like sometimes you don't need to put that extra $1,000 in?
Yeah. So the call really refers to when they used to like give you a call. Hey, Mr. Hartman, we need you to put another $1,000 inside your account. You're literally getting a call. Mm-hmm. Call for it. Now it's more like it pops up on your computer. Oh, you need to have this much money, but it's vestigial. But the margin is how much margin? How close are you to not having enough collateral to cover this? Cover the minimum collateral amount for this position. Does that answer your question?
That does answer my question. I just got a notification here. I'm sorry. It says so Tom needs to turn off his sound on his phone. I can hear it. The sound on your phone.
I got no sound on my phone.
She's got no sound on her phone. I don't know what sound on her phone she's hearing. We'll see how that goes. Somebody will expand upon that. Tom, thank you so much. Jumpstart, you've just given us an education here, a little bit of an education. We've heard about the naked short squeeze, valuation, and margin call. We got just a tiny little dose of financial literacy put into our brains here. Next time we can hear those terms on the news and on CNBC or whatever you watch or YouTube channels, you might understand a little bit more. You might not dive into depth, right? And maybe we'll talk about it more as we go. This is just cursory, but look, all I had before this was a Wikipedia read. So thank you for giving me that, Tom. Tom, people are coming into the market. They're diving in, jumping in head first. Some people are getting screwed. There's some safeguards, some guidelines, both practical and mental, that people should have when it comes to trading. I mean, talking to you for a little while, it seems pretty obvious to me. What kind of practical safeguards should people have in mind? I know we talked offline about risk management. How does that relate to keeping you safe, keeping you secure when it comes to investing or trading?
Great question. And risk management is essentially the very first step. If you're going to jump into the financial markets, risk management is your first step. And this is true not just for the stock market, but for any type of financial investment. If that's private equity, you're buying a home, you're starting a business, anywhere where you're putting your money at risk, you gotta first manage your risk. And in the stock market or in any of these fields, it always starts with first, you only bet what you can lose. A lot of people, their bets are too big. They bought a house that's too big. They overextended themselves. So you can usually tell if if your position size is too big, if you can't sleep at night, if you're nervous and you're always checking to see, and you're like, oh my God, is this going my way? If you're then you've done poorly. You can imagine the startup that got a bunch of VC money. They scaled up to 4,000 employees before in the first month. They have sleepless nights. But if you grew that company slowly over time and built the foundation, and you know what you had to lose, then you're not as sleepless.
Should it always kind of feel?
That to me was my first lesson. If I can't sleep at night, my position's too big.
I love that. What if it's like, should you feel nothing? Like, should it just be like a dead thing, or should there be some type of tension?
So there's two types of bets you could put on, right? There's the bet that you put on that's a safety bet, and that you're not really expecting it to grow massively. You're expecting it to, if you're buying Apple shares and you're expecting to make 10% for the year, you're not really losing any sleep on that, right? You're not like checking it every day to go, did it go up 1% today? It doesn't really matter to you. Yeah. But then there's other bets where you're like, you're buying a stock because, or you're placing money at risk, and you're expecting to get 5 times your money, right? Now, as soon as you have that high risk thing there, you go, I can make 5 times my money. So why wouldn't I put as much money as I can? Because I'm sure this will go right. I'm sure this will succeed. If I make 5 times my money, oh my God, dollar sign, dollar sign, dollar sign, dollar sign, all the things I can buy. And one of the worst mistakes you can make is to count the money you can make versus what is the amount of money you can lose, right? And this can hurt some people. Some people don't like that.
Yeah, that's something that you mentioned. It's you certainly didn't mention it at first, but it's like a hard lesson that you learn. And then we all, like all of us, are really into this. And I have to keep reminding myself of this. I talked to Sam about it. It's not about how much you can make. It's about how much you can lose. It's about not losing, not about winning, right? How long you can stay in the game.
The game is how much money, how do you not lose money? The game is how do I not lose money? That's the same thing for if you're starting a business. That's the same thing if you're investing in yourself on a new project. That's the same thing if you're in the stock market. It's about how do I participate in this thing that I want to participate in and lose the least I can. Now, why am I saying that? The reason I'm saying that is that through the effect of compounding interest or compounding effects, if you're there long enough, you'll eventually, if you have 51% more up days than you have down days, then you will naturally have a little bit more value, a little bit more money over time than you do now. So that allows you to stay in the game. And then sometimes you'll have a huge windfall, just a massive windfall. That could happen. But if you're not in the game, then you can't have the massive windfall, right? So it's like the person who buys 1,000 lottery tickets for this week's Powerball because it's high versus 1 lottery ticket every week for the rest of their life. Well, if you're going to buy 1,000 lottery tickets, spread that out over 1,000 weeks because you increase your chance. But some person goes, well, it's more surefire. I have more of a chance to get the big payout if I do it all at once. Yeah, but then all your eggs is one basket, and it better succeed right away. And so better to make you cannot get the big gain. You cannot be there for the right time if you're not in the game.
You cannot be there for the right time if you're not in the game. Tom Hartman dropping life lessons here today on the show. I have a feeling that after this, I'm going to have to ask you how this applies to just everyday life, like not financial, because these principles sound pretty sound. I really like that. There were three things before we move on to the story of the day, GameStop, and the mania that happened there. In case you don't know, there's a mania that happened. It's absolutely amazing. It's never before happened before, or it hasn't happened in forever. I don't understand crap about it, okay? All I hear is people freaking out about it, and I don't know what's going on. So I want to talk to you about that. But there were three axioms? Does this say anything to you? Bet small, never... what was it again? Bet small, never.
Yeah, those are the risk management thing. You
Oh,
want to
yeah.
make sure that your bet is small. You want to make sure that you know how much you're going to lose. Like, you don't think about how much you're going to get. You can think of how much you're going to lose, and you think of what's your time horizon. So a lot of people they don't know the time frame for their bet. They don't really understand. So, for example, when you're playing poker, you're trying to play long enough in order to get the right setup. But when the right setup happens, then you go as much as you can. You lean into that bet. So you have to have a time horizon. If you go, I'm going to play 3 hands or 10 hands or 50 hands, how long you're going to be there affects how you're going to place your bets. It's a very hard thing to do. But as soon as you give yourself the time horizon and what you think what you can lose and what do you think the payout can be, all of a sudden the size of your bet and how you should place the bet and all that becomes a lot clearer.
You stated it. The second one, you stated it this way. I thought it was really good. I'll bring it up here. Never borrow. I couldn't read my handwriting before, but never borrow. Bet small, never borrow, and time horizons. Is that the same thing as the not losing part?
Actually, that's yes, to know how much you're going to lose, because you'll borrow either naked shorts or you'll deal with margin calls and all that sort of thing. Those people who do that, especially new to the markets, they don't actually know how much they might lose. They're borrowing because they really want to be there because they think the bet's going to go well. I mean, if you thought there was a reasonable chance that the bet would go against you, you wouldn't borrow 3 times more than what you have.
That's right.
Like, you wouldn't do that unless you're crazy. You wouldn't do that. So the only time you really see amateurs do that is when they're really oversized in their position. So no borrow is the same thing as know how much you're going to lose. But as a general rule in the stock market, don't borrow anything. Someone might go, but I only have $100. I only have $500. I really want to make a lot. Freaking don't. Oh, but I can't buy a stock of Tesla. Tesla's $800. I only have $500. I got to borrow in order to... Don't borrow anything. There is always 100% another opportunity where the amount of money that you have, even if it's $50, might actually yield you something good. But never borrow a penny, ever.
Because if you win, then you'll be happy.
I'm not saying that as an exaggeration. I'm saying do not ever do it. Sometimes do it. Moderation and everything is moderate. No, do not ever do it.
I think what you mean to say is don't ever borrow. I'm not sure if you made it clear enough. I don't know if
I think you're picking up on it.
Yeah, because if it goes your way, then great. But if it doesn't go your way, you're out of the game, and that's rule number 1, right? Don't lose. Don't come out of the game. As long as you're in the game, then you can move forward. So don't let greed or FOMO or the lack of impulse control be the victim of. And if you have problems with that, maybe don't trade. Maybe don't get into the market. Maybe that's not your thing. Or do set it and forget it type of thing. Some good advice here, Tom. Bet small, never borrow, time horizons. I think that's a mindset. It's a mindset way of looking at things, but it really is practical, right? It's a really practical advice for dealing with the financial markets. Probably dealing with sort of finances just in general, right? Just don't
right.
apply these principles.
Well, let's say if you have 100% of something of your money, and then you do a bad bet and you lose 50% of it, right? This is not even just going bankrupt. You lose 50% of it. You're going to double your money to get back to even. So why ever put yourself in that situation?
Yep.
Give yourself smaller bets that's over time give you money. Because if you make a wrong decision, which you definitely 100% will do at some point, why set yourself back so far? I mean, you're looking into the eyes of someone who's made that mistake. Do not make that mistake.
Oh, Tom. Oh, thank you. We all get we get to learn from your mistake. Tom, I kind of feel like you're saying, like, I listen to scientists and astrophysicists, and they're like, it's not a matter of if an asteroid is going to impact Earth. It's a matter of when an asteroid is going to impact Earth. We've got to build up our defenses. And this is a type of safeguards I think are very important. Crisis, cataclysm, extinction level event will occur to you. And so that's what you want to mitigate against, not how victorious you're going to be and how this person made more money than you and how the shame you feel relative to that. You know, if you make $1 million instead of making 100 million, that's better than you zeroing out.
That's exactly right.
Perfect. I love that. I love that. All right. On to the topic of the day, Tom. I don't even really know how to pose the questions here, because even after you've explained it to me, I know people were short squeezing GameStop. Go.
All right, let me tell you about the GameStop here. Right? Oh, I can't even wait to tell you this. Right? So just in case you don't know or people don't know, GameStop is a retailer. They sell video games. On disc, they sell video games, and their whole business model is that you can return games that you purchase. Right? You purchase $60 game, you return it to GameStop. They give you $8 on the game on store credit, and then they resell it for like 40. Right? Great business model. They're making money hand over fist until people are like, "This is ridiculous.
It's
I
like
don't want. Why am I giving a $60 game?"
Pawn shop?
Yeah. Well, at first they were giving they were giving a lot of the value of the game back, but then as digital games came on the market, their margins became smaller, and they give you less and less and less and less and less. But there's not a lot of competition in the space, so they're like the place you go for physical ones. And in Canada, it's EB Games. They're called EB Games here, but it's all the same thing. GameStop. Okay. So their stock. Look, I'll show you the chart over here. So their stock has been steadily going down over the last few years, right? It peaked in 2007. Let me get it here. It peaked in 2007, again a little bit in 2014, and then it's just been a straight down. Can you see that there?
I can see it.
So it got as low
as... Wait, hang on. That doesn't look like
$2.
That doesn't look like a straight down to me. Like, you say straight down, I see straight up, but is that what we should consider
a trend?
Straight
down? It never got back. It never got back. When it doesn't get back to a high, we don't care if it goes up and down. Everything goes up and down. What's important? What is the trend?
Gotcha.
And this has been trending downwards. So it got all the way as low as $2.57. Now, you can imagine people have been making money shorting the stock, betting that the price will go down lower for years since 2016. It's been like basically surefire money. Well, what happened was that when a stock is being shorted, it actually creates more shares. This is one of the benefits of shorting, that because you're borrowing someone else's shares and you're shorting it, the market, it looks like there's more shares around, right? Because someone's buying those shares. So it looks like there's more shares around than there actually are. It actually creates a bunch of synthetic shares that are out there. So you can imagine that the company, GameStop, issued a bunch of shares, 25 million shares, and those are floating around, being traded back and forth between people. And what happens is that eventually the amount of shares that are shorted can, in this case, equal the amount of shares that are available to buy. So that means since those who are shorting the stock have to buy back.
There's no shares for them to buy,
right? They're shorting. There's no shares for them to buy. So then, and because the price gets so low, there's a bunch of people who are not like, they're like, I'm not buying the stock, right? I'm not interested in buying the stock. There's not enough shares anyway. It just keeps going down. So it gets to this bottom. It gets to this bottom level. Well, there's a thing that companies do called buybacks, where in order to make their share price go up, they buy a bunch of shares from the market to take it off the market. And supply and demand tells us, if you reduce the supply and demand is still there, price goes up. So the price goes up a little bit. So the price might go up over here. I'll switch back. The price might go up from $2.50 and go up to $7, right?
Mm-hmm.
Now when it goes up to $7, the guy who's shorting it at $5, the guy who's shorting it here, he's got to buy the shares back, right? He's already down. He's like, this is up to $7. I bought it at $5. I'm down $2 per share. I gotta buy it back. So
If he
they
wait,
start
hang on,
buying
hang
back
on.
the shares, which
He buys it back, but he's still losing because he has to buy it back
He's
at
losing
double or triple the amount that he
Exactly.
planned.
that's
So
right.
already he's losing. If he can find shares, he's still
Already
losing.
exactly. That's
And
right.
that's at
Because he
$7.
might be getting a margin call.
Okay.
Right. He might be getting a margin call. The bank says, "Hey, look, this bet's going against you. You gotta buy back the shares now." So he's to buy back the shares, and he's gonna buy it back. There's no shares, right?
Mm-hmm.
There's no shares available, so he's gonna buy it back at the next highest price that he can get it. So the price goes up to solicit someone to sell these shares. So some guy's like, "Yeah, okay, I'll sell it to you for $10, right?" And so on the chart, it ticks up $10 for the share. So then other people who were short at $12, they're like, hey, wait a second, this price is set it up. This price just went up 400%. I better buy back these shares to SWIT before I get a margin call. Or some people already in margin calls. So it causes all these shorts who have to buy the shares back to scramble and scramble and scramble, and they chase the price up. Then there are people who are like, hey, these shorts are scared. They gotta chase this price up. If I buy it now at $15, I know for sure it's gonna get up to $20. So I could just buy shares at $15 right now. I know it's got to go up $5 because those guys bought it at $20. They're gonna have to cover at some point, so it's guaranteed money for me. So I tell my friends, hey buddies, let's just get in here and let's buy these shares because they have to buy it. We know they have to buy it back.
But
right?
if
So
they have to buy it back, but at that point, will there be enough shares? Like, okay, if they have to buy it back, if they don't have money, then they're not buying it back.
no, the bank buys it back for them, and then they owe the bank.
Oh,
Right, that's where your margin call comes in. Now you owe the bank a bunch of money,
I see.
but automatically it buys it, right?
Oh.
Or they have money and they use that money to buy it back, so they don't lose everything. But one way or another, the shares are being purchased. Like when you borrow shares to short, the shares they get bought back.
All right.
Right? You might not have your home anymore. You might be bankrupt, but those shares get purchased back.
Again.
Okay. So then, so the stock went from $2.50, 57 cents, and it gets all the way up to $40. All right, that's $40. I'll show you right here. It gets up to last Friday or whatever. It gets up to $40, which is here's about. All right. Then there's these huge companies, hedge funds that are some of them pride themselves on short in stock, right? They pride themselves on short in stock, and so the CEO of one of these hedge funds went online, and he was trying to do a cautionary video, right, to help people out. He goes, look,
I heard about
guys,
this.
you don't know what you're doing here. The stock really is valued at $20. It's at $40 right now. If you're buying it now, you're gonna lose your shirt. You know, sort of like talking to the little people. He really came off as he's talking to the little people. Let me tell you, little boys and girls, how this is gonna work. I'm giving you a cautionary thing right now. Get out while you still can, because things are gonna go bad. It's $40. You know how much money we have. You know how many people are short in this. This is going down the tubes. But he was really, he really came off as an ass. The thing is, he pissed off a Reddit thread called Wall Street Bets. And this is a Reddit thread with 2 million subscribers. And they listen to it, they trade each other's bets, they talk, you know, they go, oh, we're gonna buy this, we're gonna sell that. It's a forum, they're collaborating. And they saw this video where this guy was basically, you know, dumping on them, calling them losers, like you don't know what you're doing. So they all decided they're gonna buy GameStop.
Okay, wait,
They're gonna
hang
force
on.
a short squeeze.
He tells them, look, this price is too high. It's not good. Don't buy it. It's worth less than this. And these guys in the Wall Street Bets Reddit group online, they decide, hey, this guy is talking down to us. instead of doing what he wants, which is don't get into this media frenzy, don't buy the stock, which will only cause the price to go up. They decide, hey,
No, he's saying the price won't go up. He's saying the price won't go up. He's saying you guys can't make a short squeeze happen. I know you think so, but we'll just keep shorting it. We got billions of dollars. We'll get the price down eventually. We'll just keep selling it.
Oh.
We'll just keep selling it and selling it. You can't do anything to us.
So then
we have billions of dollars.
So, but then why did it go up to begin with? Why didn't they just correct it when it was at 20 or 30 or whatever?
They were, but what they were doing was underestimating the power of retail investors. These are institutional investors, and they thought they're just a few people driving the price up a bit, right? Because there's no shares, right? There's none of the shares there, and all it takes, like the price you see for a share, all that means is that is the next price someone will buy it at. It doesn't tell you how many shares are there or anything like that. So, if only 2 people are trading it, right? And I want to buy the stock from you, well, I got to buy it at whatever price you're willing to sell it at. So just because the stock price says $40 doesn't mean that there's millions of people waiting to sell the stock at $40. Mm-hmm. There could just be a few people. So a price can move very drastically. But it also goes down the other end drastically, right? As soon as someone goes, oh, okay, this stock is not worth anything, it could be worth $8 in no time. But what this guy did was drastically underestimate the power of massive amounts of internet people who are trading at home and COVID and nothing to do.
I love hearing that. Okay, that's what Happy for Change is all about. Mobilizing people online to do great things. And here's a group of people on Reddit we never even heard of causing grief to this billionaire or billion-dollar company.
Right. So they caused the stock. It's at $40 last Friday. The guy put out the video. During that day, the stock goes from $40 to $60. All right? It goes up 50% in the day. It closes at $60, and then over the weekend until today, the stock goes from $60 to $159. Now,
hang on.
Billions and billions of dollars.
Wait. Where this story started, we were talking about $7.
$2.57.
And now we're at to $159
per share, exactly.
So, I mean, people must have made a ton of money.
Like a 4,000% increase. Sorry.
People must have made a ton of money.
Yeah.
So it's a good day.
If you just bought the stock, if you bought the stock at you put $500 in, you made $19,000. If you bought options on the stock, a $500 position in options might have made you $100,000. But think of it, you're like, where does this $100,000 come from? It comes from the other side. The people on the other side who need this insurance now are willing to pay an arm and a leg to cover themselves, because options are insurance. So there are multi-billion-dollar firms that were short GameStop that got wrung out. We don't know the details yet. We'll find out over time. But it looks like at least one hedge fund, one multi-billion-dollar hedge fund, must have gone belly up because of this. Because it doesn't matter that if the stock comes down tomorrow, the margin call happens today, right? The bank doesn't care if the stock drops by 1,000% tomorrow. You owe that money to SWIFT.
So how many people are in this Reddit group?
2 million people in the Reddit group.
2 million people. Folks.
Well, we don't know how it's mobilized, right? We don't know exactly. We don't know how all it could have been a bunch of people then went long. Other hedge funds would have been like, oh my God, we know these other hedge funds on the other side of this bet. And all you need is for a minority of people to come together, and it causes this momentum. And, there are these computer algorithms that trade a stock. And there might be some computer algorithms out there that says if a stock moves up 5%, and the amount of shorts equal this much to the amount of shares, buy $1 billion worth of it. If it moves up 10%, buy $5 billion more. Like, it could just snowball until you have this insane thing where the price goes all the way up to 159. So, Peter, This over here, this peak that we're seeing over here, which is 2007, that's the height of the financial bubble, right? It's at $63. The price went twice as high as that.
Oh my God.
Here's the funny thing, Peter. Here's the cautionary tale. So today, so this week, you see this candle here? You see how it's, can you see how it's half green and half red?
Yeah.
That means some people, retailers, bought the share at $140, let's say.
All
right? Because they're like, well, this is going to go to the moon. If it went to $140, why couldn't it go to 280?
Oh my
right?
God, that's so stupid.
That's right. So there's some. So then this stock fell today. This red thing, it fell from 159 all the way down to what is it now? $76. So there are people who misunderstand what's going on, who now they lost their house the other way.
Oh my God. So they weren't squeezed. They weren't squeezed. Go ahead.
Yeah, some people place a bet and go, well, it went up so much. They go, it went up so much. It's got to go up more. It's got to go up more. It's going to go up to 200. So I'm going to take out debt to go in long on this, and I'm going to make a ton of money. They're taking the opposite. They're not doing the short. They're going long now. Using debt.
So wait.
And then the stock drops more than half of what it is. Now, here's the crazy thing, all right? So you can lose your shirt in that. It comes down. Now, this price that it's at right here, the price that it's at right now, is still above the all-time high of 2007. So you're going to lose your home twice over.
Oh, my God.
And the stock is still above all-time highs. Like, when I say this has never been done before, you can see, look at this chart. This never happened before.
Yeah.
You see any other giant spikes on this chart? No. No. This is a ruined chart. This chart's ruined from now on. You'll never be able to scale this properly. It's freaking crazy. All right? So it's a once in a lifetime thing that happened at the same time in both directions. Okay, so why am I talking about this?
Why are you talking about this?
Am I saying you get into GameStop? Get into GameStop? Don't buy a GameStop. Guys, if I had made you, don't buy GameStop. Forget the stock. Don't even think about touching that stock, okay? You don't know what's going to be like at tomorrow. It could be at $1,000. It could be a -12. You don't have any idea.
That's where you make the money.
If what you're getting from this,
no risk, no reward.
If that's what you're getting from this, we can turn this off right now and forget you ever heard the word. What I'm trying to tell you, though, is that this is not an unexpected occurrence. Even though it's a once-in-a-lifetime thing, you could tell that this potential existed because of how much shorting was going on and how many shares are out there. And there are things like this, I mean, not necessarily as crazy like this, that happen in your life all the time. Happen for businesses all the time. Venture capital, startup businesses are like this. They have an idea, and if they're around long enough, sometimes they could catch the perfect storm and explode, right? Why is Facebook here and MySpace isn't, right? Why is Spotify super popular when LimeWire wasn't? Mm-hmm. There's all kinds of if you're around long enough and you're paying attention to the details that are affecting the different aspects of your industry or your interests or whatever, you might be able to pick up on stuff like this. There are people who saw the short squeeze coming, the potential, not the guarantee, but the potential, and place themselves accordingly. So that a $100 placement could have made you $50,000 if you played it right. Now, in your daily life, right? So there's people who are, let's try to tie it together. There's people at their company, employees at their company, who they don't know how much money they bring into the company. They don't know how much they're worth there. They don't know their own valuation. They have no idea. And this makes it difficult for them to know, should I be asking for a raise, right? Maybe I'm actually bringing more money in than I realize, and I should be asking for a raise because I have more skill now. I've been here for 4 years. I have more skill. Or maybe I'm being overpaid. Maybe I'm actually not bringing anything in. I better up my productivity to swit, right? Sales representatives don't have to worry about that because they're told about their value constantly, right? With their commissions and their sales reports, they know. But the customer service agent might not, or some other the HR department person might not. They might not know how much money they're bringing into to the company. Maybe compared to other people in their industry, people in other positions, maybe other positions are getting paid more, and they're getting shortchanged, right? But knowing this allows you to go at the right time to your company, right? If you pay attention to your company and you go, oh, they just had an annual general meeting, they just showed that they're up 20% on the year. Now's the perfect time for me to go and ask for a raise. But you'll never know that if you're not paying attention to the details that affect your own value. You'll just miss it completely. You might miss going to an event, a party, or a phone call that you could have made to somebody, or a book that's sitting on your shelf right now that you're not reading, that in it might be information that you don't realize will be super useful to you right now.
So somebody like invites you to some party 10 years from now when everything's back to normal, and you feel like saying no, you might want to inquire as to who's showing up, just get more information.
Well, you think to yourself, well, what am I risking going, right? Some people don't go to the party because they risk the anxiety. But then you go, well, what am I losing, right? What is it that I'm losing by not going versus what is it that I'll lose if I do go, right? If I go, I could always leave. I have some anxiety, but that what if I go to the party and I might meet someone or make a contact that gives me a contract or gets me a job that I wouldn't have had before, right? So if you go, well, the upside versus the downside is so much greater, then you go, well, I guess I have to go to this party, right? If I told you about this GameStop bet and I go, look, for $100 down, you might make $10,000, and I provide you with the information as to why, well, it'd be sort of silly not to take the bet, right?
Yeah.
Because you go, well, what am I going to spend my $100 on anyway? I'm going to eat it and then poop it out, which is like what I like to say. Okay, well then I should take the bet. So
a lot of this is
okay. My Hello Google's talk.
Go ahead. You can deal with your AI snoop in there if you want. Okay, so right place, right time. How can you tell if something is an opportunity for you to engage in, not engage in?
So you'll never know when the right time is. That's one of the interesting things. Timing is something you basically never get. It's lightning. When will a lightning strike occur? So you never really depend on timing. If you do get timing, some insider information, you figure out, a piece of information that most people don't have, fine. You might be able to nail timing, but you got to assume you can't do that. So if you can't do timing, then you got to go, well, is there opportunity in this industry, in this field that I'm interested in, right? Mm-hmm. So if I were to tell you, I'm going to open up a physical magazine company subscription to distribute, you might be like, Tom, this is the wrong environment to do that. That's not, you don't have a reasonable probability of success on that. But if I say, okay, Peter, you want to start a live stream, a show on motivational show on YouTube, well, it's hardly a better time to do that, right?
A motivational comedy show. Just to be clear, a motivational comedy show. There's never been in a show like this on the internet before. You point me to one show that's like mine. One. I'm sorry, go ahead, Tom. I got.
There you go.
You triggered me.
So you go, well, everyone's stuck at home, right? People are looking for motivation. The people are rebalancing what they consume online. This is a great opportunity to do that, right? But you had to start developing these skills a couple of years ago, right? I remember you sitting inside of a basement every Wednesday on some crappy webcam doing the appreciationist, doing a show. You're learning the skills, you're developing it, and then when the right time hit, we realized, this period of time is perfect time for this. This is where you jump in and you're trying to take full advantage of it, right? You might skyrocket, you might not, but you're here for it, right? You got a sense that the environment is right. We don't know if the timing's perfect, but you know that the environment's right. But you'll only know that if you're paying attention. If you get out of your comfort zone, do a little bit more work than you normally would, put down the TV a little bit, take an hour that you would have done something unproductive, value your time, and actually learn about the different metrics in your life that are affecting you. So you might imagine this health crisis thing happens, and we sort of think it's silly. Like people nowadays think it's silly to have a year's worth of rent prepared in your savings account, right?
Yeah.
If you had told someone that before, you'd be like, "Why would I have a year's worth of rent?"
Yeah.
Right? But it doesn't seem so silly now, right? Doesn't seem so silly now. But
I
back
remember
in
hearing
Depression era days,
I remember hearing someone told me that in Russia, it's common practice to have at least 3 months for your business or 3 months for your rent because they know that the floor can drop out from under you at any time.
that's exactly it. So uh, if you have that, if you're prepared yourself in such a way that that you could be around long enough that you can suffer volatility, that you can suffer some downturns, then you could be there when the timing is right.
And how do you?
That's what I like about the GameStop example. That it's like there are people who made a fortune because they're at the right place at the right time. 6 months ago, no one was talking about it, and now everyone was. But 6 months ago, people were like, I think I want to be around for that. I think if it happens, I might want to be around for that.
I imagine.
And I find that just so inspiring.
I imagine that the metrics, the information that you get from one topic to the other, will be different in order for you to evaluate whether or not an opportunity is a good opportunity. But is there any sort of general big picture criteria? Like, how do you tell? Like, I remember watching the news and the financial news, and they're like, "Look, if we're talking about it on financial news, this is no longer a secret. Like, don't come into this thinking you're the person who's getting in on the game. Like the moment it hits the news, the moment it hits the TV, the moment everybody's talking about it, I think I remember you telling me that. That's probably the moment where you're not sort of interested in it, and vice versa."
That's right. Yeah, but yeah, if you're getting it from just regular mainstream, right, then it's too late. Financial markets or anything. If you're hearing about the trend because your parents told you about it. Hey, did you hear about Bitcoin? Okay, maybe not the best time to, maybe not the best time to get it. Maybe you missed the boat a bit there. But that's why it's useful. That's why it's useful to have a group of early adopters in whatever industry that you care about, a group of early adopters that you could pay attention to, that you like to consume, right? It could be news, it could be podcasts, it could be entertainment, whatever. Early adopter people that you go, okay, I'm gonna regularly listen an hour every day, an hour every week. I'm gonna listen to what these people have to say, and when they say something that's interesting, that's something that's percolating at the beginning, okay, I'm gonna pay attention to it. I remember back, how many years, Peter, was it that we used to watch Film Riot, right? This is a show we watched on Revision 3, this online channel. It's on YouTube now. And these people who are making commercials and making videos, making movies, they were teaching you how to use camera equipment and audio equipment and all that. And we didn't have any of that stuff. None of it. But how many hours did we spend? Okay, we're just going to pay attention to it. I mean, it wasn't even like, oh, one day we'll use this. Yeah. It's like, okay, if we're going to use time to consume entertainment, let's watch some entertainment that's like useful, that might teach us something. And then it turned out that ended up being super useful now. Or when I got into developing websites, right? I wasn't doing any websites. Mm-hmm. Like that wasn't my job. But I was just started doing websites on the side. I just started doing websites on the side just for fun, to do to learn something, to I want to learn how. I just wanted to use some of my entertainment time to do that. And then it turned out, then I worked in that for the last 10 years, 10, 11, 12 years. Like, I didn't know that was going to be the case. And so if there's one thing I would want people to take away from that, is that your time, what you pay attention to, what you give your attention to, is so unbelievably important. But the only way you'll really understand how important it is, from my perspective, is if you put a number to it. If you go, this is what my time is worth. Every hour of my time is worth $100. And then you go, I just binge watched a season on Netflix. I just spent $8,000 of my time. That's how, if you think of it that way, and you go, oh man, let me peel off $2,000 worth of my time and literally spend my time on this other thing. Then I think you might be more inclined to do it. And that's what being in the financial markets, even cursorily, has taught me to measure it in probability, measure it in potential outcome, put a dollar quantity to it, and all of a sudden you'll notice your behavior changes pretty drastically. Would I like to make $15,000? Yeah. Would I like to lose $5,000? No, no. So don't do it. Don't do that.
Don't
make that
go out
bet.
binge drinking every weekend over the summer, because that $2,000 you could put that into an investment that could yield you double or triple or something in the future.
Like I said, that you're the happy hour that you're doing from 5 to 7 not only costs you that much in drinks, but also costs you, if you value your time at $100 an hour, it costs you $200 extra on top of what you spend. And then the hangover the next day when you're hungover for 2 or 3 hours, that's costing you another $300 as well. And when you put it that way, then you go, do I want to go to a happy hour? Well, do I want to spend $700 on top of what I'm going to drink? No. Great. Easy decision.
How do you determine
Simple.
Your self-valuation? How do you determine what your price per hour is? Like, you might some yeah.
Two things, two easy ways. The first one is that you already have a price per hour. You go, how much money do I make in a given time? Divide that by the number of working hours, which is a third of a day. And that'll give you your current hourly rate. But then you go, well, what is the hourly rate I would want to be valued at? Well, then you have to be productive at that rate. So if you're getting paid $30 an hour and you want to be worth $150 an hour, well, then you better do 5 times more work in the same period of time, buddy. If you're not doing 5 times more work, you ain't worth $150.
Well, it might not be.
I mean, productivity. I don't mean number of times worked.
Yeah.
I mean productivity. You need to be able to output that much more.
Yeah, you're the one who told me, like, the reason why an employer would pay you $15 an hour is because you are providing at least that amount in productivity, or else they'd be losing money hiring you. And so if you want to get paid more from your employer, you have to provide them with more than whatever you're asking for in terms of productivity, so that there's a justification for it. It can't just be like, because I want to.
Well, it's to be a no-brainer, right? If you make the case if you go to your boss and you go, oh, I think I need a raise because I've been here for 3 years. I need a cost of living adjustment. What employer wants to hear that? They're like, yeah, my cost of living also went up. I'm not interested in that. But if you go, I've increased my productivity by 20% this year. I've brought this much money, this much money into you. Either you give me a raise, or I'm going to I'm taking this other job, which I already did an interview for, and they're willing to hire me at this amount. Then I'm going to leave. Then they have to raise your pay. They have to. Or if they don't, you just jump ship. But it takes you to do the work and prepare yourself, right? Beef up the right metrics so that you can make a play like that.
And that's why it's important to do your homework and do your own evaluation on yourself to know, like, how much money are you bringing into the company? Like, how much are you worth to folks, right? You might not even realize that you can ask for a raise. It might not even be a question that you've even considered. But once you realize, hey, hang on a second, I have all the skill set. I've been working here for 7 years. I'm not really replaceable. I now I can do the math on actually how much I can ask for a raise and what can I expect and what's fair and all that stuff. It's the same thing you do with a car, right? I'm looking for a purchase of a car, and you're like, okay, well, what is the true value of this vehicle? What can it give to me? You know, it kind of helps you make all the decisions that you want in your life if you can actually start putting metrics or dollar amounts in this case to yourself or to whatever it is you want to do. And it's a great way of thinking of yourself because like, let's say you're not planning on asking for a raise, you're not doing any of that, but you do think that you do value your time at $50 an hour or something like that. And then you start realizing, hey, if I watch Netflix, if I do this, do that, oh, watching this show really is $2,000 worth of my time. Like, that's actually what it is, as opposed to feeling like, oh, I just wasted my time today. Well, no, but you wasted it this amount. Doesn't that shock you even more? Like, it's far more impactful to have a metric, a measurement to yourself or to whatever you care about, to what you value, as opposed to just it being this nebulous thing. My employer doesn't value me. Like, yeah, but how much, you know?
Exactly right. And it's not only just vengeance stuff. I just want to add on there. If you spend an hour complaining to your friend about something, then you just spent that you spent that amount of time, money, on doing it. So you might say to yourself, "Oh, I mean, I I'll save money just by feeling bad about the thing and paying attention and doing something that's actually helpful to me." Right? That's why they say the best revenge is a life well lived, because why spend extra on complaining?
Yeah, that's right. It is costing you. Before all this, I used to tell people in our sessions and in events, if you wouldn't spend $5 on it, why would you spend 5 minutes on it? You know, you spend 5 minutes arguing with someone about something or complaining or whatever it is. Would you spend money to do that? Like, would you spend money to have this conversation? Would you spend money to deal with this person? If not, then why would you spend your time, which is worth way more than money? Right? And when I started, actually, a few people used to come up to me and be like, that is actually a wild way of thinking about it. You know, to me, it was just a negative thought that I had in my head. It was just a negative conversation, but quantifying it made it absurd. Like, the absurdity of the situation was revealed. It's kind of like when you do the math on how much you're paying for cigarettes or for coffee or for whatever every month, and you realize, what, I'm spending $300 a month on fast food. I remember I did the math. I was spending $400 a month, $100 a week. It was about $20 a day, or give or take, a month on fast food, on junk food. And I was like, wait, hang on a second. That's a pay raise. That's a jump in bracket. You know, what else could I do with that $400 a month? You know, I could buy, all the things you could get. It's kind of incredible. Tom.
And to spend $300 a month, you got to earn $600 a month, because the G-men want their 50%.
You got to pay those taxes.
Capital gains. Taxes. Whew. Whew.
What a world, Tom. I wish that everybody understood. One of the reasons we're doing this, especially for Jumpstart, is that I want everyone to understand how important it is to understand finances, okay? It's extremely important, not only if you care about the stock market. I listen to the stock market. I pay attention to financial news all the time. Every single day I listen to hours of it, not because I'm investing in the stock market. I don't have a dollar invested in the stock market. But it helps you to understand what's happening in the world, and it helps you to understand how to think about your own life. The economy, money, financials is actually at the foundation of life, because all of life is transactional, right? There's always an exchange of energy and an exchange of something when you're doing anything. And it's important to understand the dynamics of it, how the waves work. You might not understand the details of it, but just having a general understanding can really help you in your everyday life. Tom Hartman, you've given us a great education here today. I don't even want to keep you along. I mean, we've been on here for quite a while, much longer than we expected. I know you got things to do. I'm only going to ask you this because we had mentioned it in the previous video, and I know you wanted to talk about it here today. But if you feel like it's too long, we'll just save it. There's no problem in tabling this. Barbell strategy. Do you want to?
Yeah, so I'll just preface that by saying that I keep referring to the Nicholas Taleb's Inserto series, his book series, also on audiobooks. You definitely want to check it out. It is absolutely worth the time, and it teaches you a lot of these concepts of anti-fragility, skin in the game, how to read randomness, and it really prepares you for how to deal with probability and uncertainty. But that aside, Nicholas Taleb talks about this barbell strategy, which, just to boil it down, you basically want to, of your disposable income, right? Anything that you're putting towards investing or any productive means, you want 80% of that portfolio to be things that are safe, and you want 20% of it to be things that are risky with high possible returns. So the reason for that is that, if the 20% goes awry, well, you're not, living on the street. You're having your 80% there that's there to support you, but you'll never really get rich on the surefire thing, on the surefire, repeatable thing, right? So I use this example with you, Peter, all the time. You're an employee at a company. You've been there for a few years. You're never going to get rich working at the company. I mean, unless you make commissions or you have options on the company or whatever. But in general, just from your regular pay, from your salary, you're not necessarily going to get rich from that company or well off or whatever it is you're trying to gain. but the side thing that you're studying on the side, the side podcast that you decide to do, the arts and craft thing that you're selling on Etsy, the whatever you're doing on the side that has a higher risk to it, that you spend a little bit of time on it, but has a potential to return a lot. And so try to think of your life in that way. Think to yourself, of the time that I'm not sleeping and I'm not working, what is the 80% of my time that I'm using? I want to be productive. I want to do something that'll be good for me. Let me do 80% in something that's more surefire. So that might be learn a little bit more about your industry, short your knowledge in a particular subject that you know that you're using your day to day, right? So you become more productive in what you're doing. And then 20% of my disposable time, do something just completely different. That's just something that can be that could return a lot, but I don't know for sure. It's a gamble, but I'm spending 20% of my time on that.
That reminds me of what happens with Google, right? Didn't Google have this policy where their employees, they would spend 20% or 15% of their time on whatever project that they wanted, it could be totally unrelated to their work. And products like Gmail and Google Docs or things like that came out of that not because Google set a mission to create this, but because people just exploring their own ingenuity and giving themselves sort of a wild card optionality, the opportunity to discover something or to have a reward that was far greater than what their actual job entailed.
That's exactly right. You'll probably laugh at me for this analogy. It's a very Tom analogy, but I think of it very much like the sun, right? We know that all the elements have come out of nuclear fusion in the sun through helium and hydrogen in the sun. The helium and hydrogen and the nuclear fusion of the sun is bouncing around, and then sometimes a new element, a particle will bounce out of the sun, get radiated out, get past the gravitational field and go out into the universe and become something new. So you have your base inside the sun that's generating the nuclear reaction, and then sometimes boom, something pops out of it. And that's how creativity works. Creativity comes from you have a base knowledge that you're knocking together, you know how to do this thing, and then you try something different or a new piece of information comes in and you have a new idea that occurs to you. It just sparks out of this core. But you need that base core for safety, right? Because if you did all random, all chaotic, all creative, because you're jumping from one thing to the next constantly, you'll never, you might succeed greatly and you might fail drastically, right? You're putting at risk a lot. But if you have that base with a little bit of extra spice, well, then you can have, not only will you have an interesting time, a safe, interesting time, but you open yourself up to uncertainty, the volatility, to the unknown, to creativity.
There you have it, folks. I love that. The Barbell Strategy, 80-20. 80% on something that's safer, 20% on something that is riskier but has great returns. It's an investment strategy, but also a strategy for life. Tom Hartman, marketer. I got to call you marketer extraordinaire now. I got to find some other title. You've got so much going on. That was a very Tom example, you know. Tom likes to do examples where he takes something that's complicated and the analogy is even more complex, you know. It's pretty, it's pretty good. I remember we were in a self-help session and you were talking to people and they were like trying to understand things and you're like, it's like a computer system when you're like, and we were like, I don't even understand the computer system. Anyway, but you did a great job here today. Thank you so much. This was very edifying. How to apply it to your life. You did it all. You did everything. That's Jumpstart for you folks. If you like that, you can find Tom on Twitter at I Love Tom Hartman. Yeah, you got to write in I Love Tom Hartman in order to find him on Twitter. You can follow him there. And of course, he'll be back on Jumpstart and he'll have his own YouTube channel. I believe you already have it. What's it called? Sacred Prophet?
Sacred Prophet.
Excellent.
Profit.
Profit. Prophet. Sacred Prophet. I like that.
Yeah, it's like a pun.
It's like a pun.
Like I was thinking about how can I do something that's bad guru but better. No, but bad guru but better.
You almost nailed it. Almost nailed it. You're very, very close. Very, very close. Excellent. Tom, thank you for explaining GameStop today, giving us some financial literacy, and telling us about the barbell strategy and understanding how to be at the right place at the right time. Pay attention, folks. Pay attention. Evaluate yourself and never, ever, ever borrow to invest. Tom Hartman, the wonderful Tom Hartman, my wonderful brother. Thank you so much for your time. I really appreciate it.
Ciao.
Bye, bro. All right, that's fun. All right, let me turn Tom off here. How do I do that? All right, that didn't do it. That didn't do it. He's still not gone. Oh, because he's on the TV. That's why. I got to turn the TV off. Sayonara, Tom. Oh, didn't want to go there. There we go. All right. That's my brother for you. Excellent. Are we still on board? Okay, I don't think I need this anymore. Can you still hear me? Yes, yes. I think you can still hear me. Wait, could I hear myself? Hello, hello. Hello, hello. There we go. Hey there, folks. Oh, hope you had a good time here today. Hope you enjoyed learning. I really like learning. Look, you might be the type of person who's like, I don't really care about finance. I don't care about stocks. You should. I mean, a huge part of our system depends on it. What was that sound? Oh, it's my computer. A huge part of our system depends on it. If you want to understand politics, if you want to understand education, if you want to understand healthcare, if you want to understand things, you got to understand how money flows. And so I think it's very important, which is why I included it in the show, which is why we included it in Jumpstart. Well done, Tom. I'm seeing comments here. Sam says, well done, Tom. Oh, wait, that's on our personal Facebook. You can't see that. But he did a fantastic job. God dang, that was good. I call Tom up. Sometimes I want to listen to a podcast or something. Sometimes I want to just I want to listen to something for half an hour, for an hour. And instead of listening to a podcast, I'll call my brother up and ask him a question. I ask him a question. It's like winding him up and then just let him spin. And then he goes. And every once in a while, you just got to chime in and then he keeps going. And I get this wonderful sort of educational podcast where I can understand about the world, about finance, about all kinds of cool stuff. That's really a lot of fun. Thank you so much. And thank you to producer Samantha Barley and I guess co-producer Melissa Hartman, who's behind the scenes really helping out. Really appreciate that you listened, helped us out with our audio and all that good stuff. Thank you so much, Samantha Barley. Thank you so much, Melissa Hartman. Absolutely wonderful. Hey, maybe I'll do a card trick for you guys. All right. I haven't practiced card tricks. All right. Let's see. Okay, so I'm going to go into the middle of the pack here. That's going to be your card right here. That's your card. That's a bad card. Let's go for another card. All right. We got the 9 of diamonds. Can you see that? That's the 9 of diamonds. That's there for you, right? We're going to put it in the middle of the pack. We're going to put this on top of the pack. And then all we've got to do is ask each other, in here is the 9 of diamonds. If we shuffle the diamonds, if I take this and I shuffle the 9 of diamonds, okay, and if I do a little extra shuffle, little flair, you gotta ask yourself, hey, psychologically speaking, right? If I do this, you can't see it there. If I do this, you can't see it. Somehow, somewhere in your brain, your brain knows where the 9 of diamonds is in here, okay? Your subconscious mind knows where the 9 of diamonds is, but you don't know where it is, okay? But sense it, okay? So I'm gonna just go in the middle of the deck, okay? You tell me where to stop. You tell me where to stop. You tell me where to stop. Right here? Right here? Do I go one more? Stop? All right, right there, right? We're gonna right here in the middle of the pack. And what we're gonna do is look at the card that we cut to, and it turns out it's the 9 of diamonds. Oh, okay. I just wanted to have some fun doing a card trick. I don't know why. Tom was so impressive. I went to do something impressive too. Although I don't know if I succeeded. Hello, folks. Show's almost over. I'm not going to keep you here much longer, but I want to ask you, how was your day? How was your day? Did you have a good day? A great day? A bad day? A fantastic day? I don't know what kind of day you had, but I hope that as you're going about through your day, you're paying attention to what's going on. Pay attention to your day, because if you can pay attention to your day, you can make decisions that can improve it. And at the very least, even if you can't improve it in the moment, you can improve tomorrow. And to me, the most important aspect of today, look, the most important aspect of today is to live today, but also to prepare yourself for tomorrow, right? And the decisions you make today can make tomorrow and the day after and the week after and the month after, year after, so much more impactful, so much better. I hope you had a good day. I want you to remember during your day to love yourself. That love is a choice. Love is a choice that you make, right? Love is not just something you say to yourself and then you set it and forget it. Love is a choice that you make in every single moment. Love is the recognition that you have value. And there's love for yourself, self-love, and love for others. But love is the recognition, the appreciation of your own value. That's why when you love yourself and you see your own value, it feels good. And when you love others and they love you, it feels good as well. Because what they're really saying is you are worth something. You are worthy of love. You are worthy of positive feelings. We're happy that you're here. You deserve to be here. Love is a recognition of who you really are. Recognize your own value. Now, maybe you lived your life and you think, I don't really have any value. But just so you know, as a human being existing on this planet, you have value. All of your life today is the result of all the decisions that came before you. Every single person who lived throughout history, whether you know their name or not, and most of them, you do not, 99.9999999 till infinity, you do not know their lives. You don't know what they lived. They might have been short, it might have been long, it might have been fun, it might have been brutal, but all their lives led to where you are now. All of their lives led to your experience right now. So sometimes it can be easy to feel like you're a drop in the bucket. It can be easy to feel like you're really not anything special, that you're just part of the ocean. But being part of the ocean is absolutely fantastic. The ocean is absolutely great. The ocean flows into the streams, into the rivers, and creates the network that we see on our planet. You matter because you're part of that whole. And because you matter, because you're part of that whole, because the future of the human existence depends in part on decisions that you make, making those decisions from a place of love, from where you recognize your own value and the value of the people who are around you is absolutely crucial. And that's kind of what I'm a little worried about with what I see happening in the world today. People getting far too comfortable with hate. And I don't want you to become comfortable with hate. Hate should feel uncomfortable. It should feel undeserving. It should be the last resort. Hate is like the war within your soul. Hate is war within your heart. And war should always be the last option after every single option has been explored, has been exercised. Then you can go to war. Then you can hate. Love is a choice, and it's not always easy to make the choice to love. It's not always easy to make a choice that sets you on the right path, that encourages you to forgive, that encourages you to let things go, that encourages you to see the value in something that you might not want to see the value of. Look, there's some people who can't even love a rainy day. They can't love the cold. They can't love traffic. But these things happen in our experience. You might think to yourself, hey, Peter, I might be able to love the rain, I might be able to love the cold, but I can't love traffic. You're in traffic because you have a car. You're in traffic because there's a bunch of people on this planet as opposed to it being barren. You're in traffic because there's roads and there's street lights and there's city planners. You're in traffic because of every decision that human beings have made. You're in traffic because somebody invented the car. You're in traffic because somebody invented money. You're in traffic for a lot of different reasons, and there are reasons to love traffic. And love is a choice that you make from the larger perspective. You see, when you are zoomed in, when you're having a negative experience, when you're devaluing something, when you're hating something, when you're not liking something, when you're having a negative emotion, almost always you're zoomed in. You're zoomed in and you're narrowly focused. Limited human perspective. Which is why I like to talk about the God perspective, the divine perspective, or the all perspective, where you zoom out to gain a broader view, a panoramic view of your experience, of the world. Because when you zoom out and you see the bigger picture, you get perspective, you get context. And from that larger perspective, it's easier to see how something is meaningful or valuable. Look, the reason why we know the right way to do something is because we know the wrong way to do something. The reason we recognize a great idea is because we recognize what terrible ideas look like. It's important for the contrast of your experience to exist in the world. It's important for the world to have both good and bad, light and dark, because it's that juxtaposition, that contrast, that duality that gives birth to choice. You can choose to love because you can hate. You can choose courage because of fear. You can choose to live because there is death. Sometimes it's easy to feel like we have no choice. Life sort of happens to us and we deal with it as it comes. And you don't have control over every aspect of your life. You don't have control over everything that occurs to you. But you definitely have at least some control over how you react to it. Yes, you're programmed. Yes, your reactions have been programmed and been instilled within you as your life began, right? As a baby, as a toddler, as an infant, as a child, as you grew up and went through school. Habits, reactions were programmed into you. Culture gives you that with the movies and TV shows that you watch, the music that you listen to, the books, the comic books that you read. But still, you have a choice. So my challenge to you is to find a way to love more, to choose to love more. Maybe you love, but tomorrow you can exercise your ability to love more, to appreciate the food that you're eating to a greater degree. Don't wait until the last few bites for you to recognize that the meal is almost over and you want to savor your bites. Savor every bite. Love your body. Love the fact that you're alive, despite whatever circumstance you might be in. Life is hard. Life ain't fun. There's a lot of trauma that happens in life. Misery that is self-inflicted or inflicted by others. And yet still, if we sacrifice our choice to love, then our world gets even colder and even darker. Love is a choice that you make. And the more often you make that choice, the more love there is in this world. And love is not just some airy-fairy emotion. Love is the recognition of value. And when we recognize value, we make different choices. When you choose to love the person that you're arguing with, you're going to argue with them in a different way. The nature of your argument will change because it's colored and tempered by love. And the solutions that you're looking for are easier to see because you're not clouded only by what you don't like, but you're filling up your heart and you're changing the filter by which you filter the world so that you can see the good that's there. You can see what's constructive. You can see what helps you. Every single minute of every single day, you are making a choice to move in the direction of who you want to be, and the life you want to live, and the world you want to see, or away from it. When you make that choice from a perspective of love. Choose love more often. And the harder it is to find that sense of love, of recognition, of value in this world, the harder it is to appreciate something, the more you should try. There's too much hate in this world. Or maybe I should say there's just the right amount of hate in this world. And I want there to be the right amount of love as well. I choose to love, and it's not always easy. Sometimes I don't love myself. Sometimes I don't love others. Sometimes people behave in ways that I find completely and utterly evil. But then I zoom out, and I remember that every person that I see was once a baby. A baby who was subject to their environment, to the system they were born in, to the parents that they had. A baby that was innocent and yet colored by everything that happened around them from the moment they were born and even prior to that. We're all in this system and we're all subject to what's happening around us. And so when people behave in ways that I don't like, that I consider to be reprehensible, some part of my heart reserves space to appreciate them and to love them anyway. Because when people act in ways that are bad or that causes discordant behavior, that causes bad things to happen. They reveal to us that more work needs to be done. They reveal to us that we need to do more to amplify love and care in this environment. That we have to care for the babies. We have to care for the babies that grew up into adults. We need to find ways to engage solutions, to be constructive, and to make life better, not just for ourselves, but for everyone, including our opponents, our adversaries, and our enemies. Choose love. You might not always be able to do it, but whenever you do, just know you're making the world a better place. I hope you had a great day. I hope you had a good day. But even if you didn't, love your day anyway. And when I say love, I don't mean you have to feel good about your day. You just have to value it. See how it's valuable. Because if you do that, then tomorrow can be even better. That's it for me. My name is Peter Hartman. You're watching Bad Guru Nightly, and I am Bad Guru. That's the show, folks. See you next time. Thank you so much for watching. Oh yeah, by the way, head over to facebook.com/happyforachange or youtube.com/happyforachange. Click like and that little bell so that you get notified when we go live. Tons of stuff happening. I have a wonderful project right now called Black Money Matters. It's based on my Making Millionaire principle. We're going to make 3 millionaires. We're going to make 3 millionaires by February 28th, the end of Black History Month. We're going to create 3 black millionaires. If you want to engage in that project, you can go over to facebook.com/happyforachange and just join the Black Money Matters group that's right there. It's going to be pretty simple. We're going to connect 1 million people together. We're going to choose a person. We're going to send them $2 each. Boom, millionaire. Sounds exciting? It is! Facebook.com/happyforachange for more. That's it for me, folks. My name is Peter Hartman, and I'll see you next time.